All right, Rochelle, let's take a look at some of these movers here after hours. A number of earnings reports that we have been tracking for you. Chewy, CrowdStrike, HP, and ChargePoint. So let's get to it here. Chewy under a bit of pressure after hours. We're seeing the stock fall. A lot of this has to do with the earnings that we just got. Sales missing expectations, coming in at $2.43 billion. The estimate out there was for $2.48 billion. They also lowered their revenue guidance for next quarter, the third quarter, as well as the full year. You can see the stock off just over 9% right now. CEO Sumit Singh saying that it is a recession-resistant pet category that might be put to the test over the coming quarters here. Year to date, it has been a tough go for Chewy. You can see the stock off just about 36%. Let's flip it over to CrowdStrike, a very different story there. We're seeing shares pop after hours. It was popping, now up just about 0.5%, so well off the highs here after hours. Pretty strong results here from the company, raising their full year EPS guidance. Revenue beat what the street was looking for, $535.2 million. The estimate out there was for $517 million. Taking a look at adjusted EPS of 36 cents, better than what the street was looking for at 28 cents. Over the past month, let's take a look. The stock has actually been doing okay. You can see it up just around 5%. For a full year look, though, we are well off the 52-week high. As you can see, that hit just around November. It's about $100 shy of that 52-week high at $193 a share. Let's take a look at HP. HPQ under a bit of pressure here after hours. We're seeing the stock off nearly 4%. It's a lot of that has to do with the forecast cut that we got amid the PC sales sliding here. Revenue $14.6 billion, adjusted EPS of $1.04, missing on both the top and bottom lines. 1 year chart. Stock hasn't done a heck of a lot. You can see it's still in the green, hanging on to those gains, up just about 4.5%. Rounding it out here with ChargePoint. Now, this is a network of EV charging stations. The stock up here, up just about 2.6%. Revenue of $108 million, beating what the street was looking for. Also, the company reaffirming its full year 2022 guidance. Over the past year, though, the stock has been under tremendous amount of pressure, off just about 30%, although you can still see we are off the 52-week lows for the stock that was hit earlier this summer, heading back to May. Again, shares closing just around $14.50 a share.